Yo, what's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. In this video, we're going to be discussing how to follow mitigations, some tips and tricks that can assist you all with looking for your mitigations, and a couple of other gems for you. Sit back, relax, and now, before we get started, be sure to subscribe to the YouTube channel if you're not already a part of my YouTube family. Hit that bell notification icon to be updated whenever I upload a new video, and hit that thumbs up if you enjoyed the content dropped within this video. This video is going to be revolved around mitigations and how to know and understand where is price going to mitigate next, okay? Or what is price going to mitigate next, all right? So following the mitigations is very, very important when you are order block trading, supply and demand trading, things like that. Now, remember, I simply just look at my order blocks as supply and demand, okay? So I don't necessarily look at, order blocks as order blocks. I look at overall supply and demand, where is it within the market? Because we all understand that supply and demand is what allows price to move. Price moves from liquidity pool to liquidity pool based on individuals cashing in on the Great British Pound asset or the Japanese Yen asset. Price has to move back and forth between the two in order to not impact price greatly. All right, that is basically why the price moves from liquidity pool to liquidity pool. That's why we instigate liquidity, things like that. Now, I do go into more depth about that on my course, so I'm not going to go into the psychology behind the banks, funds, and institutions, but that is just a little gem for you guys. So following the mitigation, if we start over here, we can see that we definitely have, let's go to the daily time frame really quickly. Okay, so based on the daily, we definitely have a point of interest here, right, within this daily candle. All right, we see that we created imbalance, we created breaks of structure, all the above, okay? So this is an important area for us. Price trades back to this area, mitigating this supply that was resting here, right? We mitigated that area, filled any of those orders, and then once again, we see imbalance, we see a liquidity void, and we see a break of structure, okay? Our last area that price has yet to mitigate would be this area here, okay? What happened? Price traded back into this region. Let's go to the H4 now. Price traded back into this region, sweeping liquidity, mitigating this area to the left, and then once again, breaking more structure. Now, we haven't broken our higher time frame swing structure yet, right? Our break of structure for our higher time frame swing structure would be here. We do mitigate something, we do sweep liquidity, and we do create a lot of imbalance, okay? So I am looking for price to trade back into this area, okay? This is going to be my valid zone. Be sure that you guys are marking up these areas right along with me. We can take this and we can put this on, that can stay on the daily time frame for now. Okay, we know that we are pushing up into our premium pricing, so this is prime for sales to take place. You guys can see that I do have my alert set right here, okay, for when price taps into this area. Now, the only thing I'm iffy about in this case is the fact that we did not break this structure here, okay, so I am a little iffy about it. But we do see we have all of this imbalance. We see that this area here is definitely a very, very important interest area. For those of you who don't understand what a liquidity point of interest is, go to the video section of the course and check out these two videos here. It will change your trading completely. Like, if you only trade from liquidity points of interest, I had a one-on-one session yesterday with a student, and I told him, if you only trade from liquidity points of interest, it's going to be plentiful trades, but you're also not just going to take any and every order block you see, right? You're going to take a specific type of order block that is very, very successful in my eyes, all right? Just from my testing, from my personal experience. Even if you're a part of the Telegram channel, second link in the description, I send you guys all of my liquidity points of interest, and as you guys can see, we react to them at least 85–90% of the time. So if you're someone who wants to improve your efficiency and accuracy when it comes to liquidity trading, all you have to do, go check out these two videos. Now, of course, all the other videos are very, very important, but these two videos especially, very, very, very important as it relates to being a part of my trading plan. First link in the description to access the course. So once price pushes into this area, I will be looking for my valid entry. Okay, so my valid zone is going to take place on the H4 time frame here within this area, and then I'll be on the lower time frames such as the M15, M5, and M1, taking advantage of my entry schematic in order to be a part of this GBP JPY trade. All right, for those of you who are part of the Telegram channel, we will also update you guys on this trade setup here. All right, so following the mitigations, this is the last area that grabbed liquidity, broke structure, and created imbalance, okay, as well as mitigated something previously that has not yet been mitigated, okay? This area did the same thing, right? We swept liquidity, we mitigated something to the left, and we broke structure to the downside, and what happened? Price came right back to mitigate this area, right? It's the same thing over and over and over again. In this case, okay, same exact thing. We swept liquidity. With this push to the upside, we mitigated this area here that was responsible for breaking. We didn't really break major structure, but we did break this minor structure here, okay? And then we broke structure to the downside once again. Oh, let's fix this. There we go. Okay, broke structure once again to the downside. So these areas are very, very important. When it comes to following the mitigations, look for imbalance within the market, all right? This is a little tip that I use. You guys see how we have this nice imbalance and then price continues to push to the downside, and what happens? Price eventually trades right back to it. We have this nice imbalance, price pushes to the downside, right? What happens? Price ends up trading back to it. Once again, we have this nice imbalance within the market. What are we anticipating? We're anticipating price to trade right back to it. Now, once again, this trade does have a little less confluence, all right? Mainly because we break minor structure, we break internal structure, but we don't quite break swing structure here. Okay, in this case, from this imbalance, from this push, we do break swing structure. We actually had multiple imbalances created, but this imbalance was then used as liquidity for this area here that dropped. All right, so this is a minor zone. This was our major zone. Okay, so our minor zone was traded through, used as liquidity, and our major zone was respected. We have a minor zone here that price has already traded through. We're probably going to more than likely use this as liquidity for price to trade higher. All right. I'm also going to be dropping an educational video this week for you guys on whether or not candlesticks are reaching or rejecting, okay? Because someone could look at this here and say, oh, GBP JPY, we're rejecting, you know, price does not want to push higher, we're going to push to the downside. But I look at this as reaching, okay? Which means within the next couple of candlesticks on GBP JPY, I'd be expecting price to trade through this area and close somewhere above these wicks here. All right, let's see what happens. But that's just kind of how I look at things. Whereas this example here would be rejecting, okay, where I'm looking at price to not trade back to this area until we've broken some type of structure to the upside. All right, so let's see what happens as it relates to reaching versus rejecting. We will be dropping a video, so keep your eyes on the lookout for that. But this imbalance here, all of this imbalance tells me that price is going to react one way or another. So I'll be looking for price to trade back into this region, and then I'll look for my valid entry on the lower time frame, either during London session or Asia session. All right. So yeah, following mitigations is going to be very, very important. All right. It basically allows you to understand what expectational order flow is doing. So based on expectational order flow, right, based on following the mitigations, I am expecting price to tap into this region, give me some type of entry schematic for price to then trade lower. We're at least going to target this area here. Hopefully we can break through this region here. Okay, but it looks like price could possibly be setting up for a buy position, meaning this here could be used as inducement for this region here. Okay, price could trade back up into this region, break down, push back down into this area, and then start to make its way back to the upside. All right, we could have a higher time frame trend change, a higher time frame momentum switch. Something could be up here. All right, just make sure you guys are following your mitigations, make sure you guys are following your imbalances within price, make sure you all are following your liquidity voids, things like that, and you should be good to go. Now, I have plenty of videos on the YouTube channel as it relates to liquidity voids, as it relates to order blocks, as it relates to imbalances within the market, inefficient pricing, efficient pricing. So feel free to go check out all of those earlier videos, earlier content. I will leave some in the description down below for you guys. With that being said, I'll catch you guys on the next video. Peace out.